Hey, it's Mac with PriceActionTradingSystem.com, and today we're going to talk about something mission critical. We're going to talk about stop placement, and this is something that I found that it's really basic. But what I'm finding is that people are not following the rules. They're trying to adjust them, and I know that you read in a lot of places that your stop cannot be larger than your target. And most of you that understand our work know that we're trying to scalp out 4 ticks on a portion of our trade and then hold on to a runner, hoping that maybe it turns into a swing trade with the runner. But we use our basic rule is we never trade with more than a 2-point stop. So people get confused on this. One thing they're thinking is they always use a 2-point stop. Doesn't matter where it goes, it's 2 points. And if you get stopped out, or every losing trade you have or trade you have that doesn't work out, you're going to lose 2 points. And that's not the case. Uh, Let me clarify a few things first. We're talking about trading a daily intraday chart, or not a daily chart, but an intraday chart, I should say. And so normally what we use is a 2,000 tick, but if you can't use tick charts, you can use a volume chart, or you can use a 5-minute. People a lot of times want to say, can I use a 3-minute or a 2-minute or a 1-minute? We found that the 5-minute chart's kind of the sweet spot. The 2,000 tick chart's kind of the sweet spot. You can trade a 3-minute, you can trade a 2-minute, you can trade a 1-minute if you can read the price action that quickly. But what we find out is that most people can't read it quick enough, and they lose money. The rules that we've written are based on a 5-minute chart or a 2,000 tick chart. So don't monkey with the rules. Follow the rules to the best of your ability, and what you're going to find out is you're going to have more success, because we've spent a lot of time perfecting this stuff and testing it and trading with it, so we know what works and what doesn't work. And there's a reason behind why we do what we do. But let me explain to you again about the stops. Our first rule with a stop is we cannot enter a trade unless we can enter safely with no more than larger than a 2-point stop. Doesn't mean we're going to always take a 2-point stop, but if we can't get into the trade without taking more than a 2-point stop and still following the rest of our rules, then we either have to find another way to enter that trade or we have to skip that trade. So let me start here with a setup here that I see, and let me explain to you what we're trying to do. There's a short setup right here. This first of all, we're looking for prices to set up. I'm not even going to go into the reasons of why this sets up as a decent trade, but just assume that it is. And every example I show you may not even be a good trade, but the idea is just to show you what the signal bar looks like, how we enter the trade, and how the stop goes. So this is a nice short right here. This is your signal bar, matter of fact, right here. And so when we see that bar set up based on our other rules, which I'm not going to talk about, I'm just talking about stop and stop placement and entry here. So our entry is on a stop order 1 tick below this bar, and you have to wait till this bar completes, and then you drop a stop order right there 1 tick below it. And if the trade is triggered, you get triggered into the short trade. If it doesn't, it turns up, then no harm done. We just start looking for our next entry. But once that trade is triggered, your stop has to go above this signal bar. This is your signal bar again, and we don't sneak in early. We have to wait till it completes, and our entry is on a stop 1 tick below that signal bar. And then our stop goes 1 or 2 ticks above the signal bar. I like to use 2 ticks, and this is the reason. It's amazing how many times prices will come back up here and tick 1 tick higher and then turn back down and go right where you're thinking. So I like to give it 2 ticks, and if it gets a 2-tick stop, there's usually something else going on, and you either read the price action wrong, you got trapped, you got fooled, or maybe there's some kind of news event that spikes the volatility or something, and you get something crazy happening. But under normal circumstances, if you're reading price action right, and this signal bar helps confirm that you're right here, because you're getting a trend bar in your direction if you're wanting to go short. And I circled this red because we're wanting to go short. So you enter right there, and your stop goes 1 or 2 ticks above this. And if you can't do that within 2 points, then you got to either drop a limit order further back in here after it triggers, drop a limit order and hope it comes back and gets you, or you just have to skip the trade. And a lot of times, you know, let's say this bar is so big that we can't get above it with 2 points, then I just drop a limit order in here and hope it comes back and gets me. And if it doesn't, then I just miss that trade. That's just part of the way our rules work, and they're designed that way to make you money and to save you money on losing trades. So let's go over that again. The market's pulling back. Let's just do it right here, bar by bar. The market's pulling back. We're looking for a setup bar. We hadn't really got one yet. And then finally we get one that turns out, all right, there's a nice reversal type bar. It tested those highs, close and turn down and close on this low. We want to go short right there. We go ahead and we drop our order there and we see what happens. Next bar, boom, we get filled right there. So now we're short, and I use the trade strategy so it automatically puts my stop at 2 points. And if that 2 points is more than a tick or two above that signal bar, then I tighten it up. And again, I like to use 2 ticks if I've got room. If I don't, I use 1 tick. And the reason we do this is because the price action itself is helping protect our stop. Look how many times prices have turned down right across there. Let me get a bar. Look across there. How many times prices have turned down across there? 1, 2, 3, 4, 5 times. So there's obviously a lot of sell orders right there, and that's what we're using to protect our stop order. And you see the trade goes on, and it's a great trade. And our stop was never threatened. It never took any heat. This trade barely took any heat at all. Of course, I put these on here after the fact, so that's easier. But here we go again. Here's another setup right here that I like based on our rules. I'm not going to talk about the setup itself. I'm just talking about our entry once we find it. So the entry would be 1 tick. Here's your little signal bar. The entry is 1 tick below it. And this is a really good example because this one backs up. And your stop goes 2 ticks above that. Let's just see what your stop would be. Your entry is 1505.75. So if we use a 2-point stop, that's where your 2-point stop would go, 2 ticks above. So this trade, actually that's 1 tick, so that just fits. Hang on, something's not right there. 1505.67.75. So yeah, our stop would go right there. So that gets you 1 tick above that bar. But look what happened here. Here's the point I'm really trying to make, is that prices pull back, but notice how they can't get above that signal bar. So if you were trying to drop in here with a 4-tick stop or something, then and your stop and your entries right here, then 1, 2, 3, 4, you would have got stopped out exactly on 4 ticks right there. So by having it above the signal bar, even though it took a minute to work on down, our trade was safe. That price action structure helps protect our stop. So there's a reason it goes up there. Again, look right here. Here's your signal bar. Your entry's right there, 1 tick below it. Notice how we never even, most of the time you never even get any heat on your stop because if you're entering at the right place based on the way we teach, the trade takes on off. Then you got a long down here. Notice what happens. As long as your stop was there, there's no prices never even come close to it. Your trade's triggered and it takes off and it's gone. Here's the next entry that meets our trade rules. Your stop goes right there, or your entry goes right there, and then when it's triggered, your stop's down here below this. Notice what happens. It never looks back. Here's your next entry. Prices take off. They never look back. You wouldn't have got any runners on this one. You would have scalped out and it would have came back and got your runners, but no, there's no heat on this trade. You could have got in this trade. Your stop goes right there at 1507. Let's just see what that would have been. 1506.75 is where you would have entered, and your stop would have been at 1505.7. So a 4-tick stop, and if you'd have used 2, it would have been a 5-tick stop. but your stops never threatened. So the most you could have lost on that would have been 4 or 5 ticks, even if you were wrong. Here's one that you might have entered on right here that kind of meets our criteria. And notice what happened. If you put your stop a tick or two down here, you would have lost 1, 2, 3, 4, 5 ticks on that trade. Assuming that you didn't get out, which the rules would have probably prompted us to exit on this bar right here. And if you had it 2 ticks, you definitely would have exited on this one, and you would have got out at scratch or maybe with a tick. So, or maybe the worst you would have done was lose a tick or 2. And then, of course, your next trigger is right here. Your stop goes here. Look, it never took any heat. And so, and then here's your first trigger coming short. Your stop goes, this is your signal bar. Your stop goes up here. This trade was off to the races and never took any heat. Here's your next one. There's your signal bar. Look at that bar. Your stop goes up here. This trade never took any heat. And that was all I had marked for the day. But let me show you an example. I actually showed you this one. So you would have entered here, and you would have taken a little heat on this trade. But by having your stop above that, look what happens. It never gets triggered. Here's a good example right here. There's a possible long, and I guarantee a lot of people got trapped long here because they had all these matching lows and it broke lower. And so they're looking for prices to reverse. And these are people that like to counter trend trade. But anyway, they would have got triggered long in here. And notice if their stop would have been, this would have been your signal bar and your stop. It's not a great signal bar. I don't like it at all, but there's people that took this trade, I guarantee it. And their stop would have gone right here, but look what happened. It came back and it couldn't get below that. That's a critical spot. Even that bar had only got 1 tick below it. So even if you'd entered on this bar, it never triggered. But if you had and had your stop 2 ticks, that's why I like 2 ticks, it never would have gotten it. And it would have gone on and gave you an easy scalp. So hopefully that all makes sense to you. And there's a rhyme and reason. And what prompted me to do this video is I continue to get emails from people saying, hey, you can't, you know, the rule, you know, everything I've ever read says your stop can't be bigger than your profit target, or you know, you're not managing your money properly and you're going to lose money. Well, if you're only winning, you know, 50% or less of the time, you know, if you're a gambler, that's correct. You know, you got to use much tighter money management. We're not gamblers, though. We are price action traders, and we only enter at key entry points following specific rules that really allow our trading to be anything but gambling. We are only betting on high probability entries. And believe it or not, you can learn, if you learn to do this, you can have a winning trade. You're only trying to get 4 ticks, and once past that point, you could get more, but you have no more risk in the trade after 4 ticks. So it doesn't take long to take all the risk out of your trade versus the way a lot of other people trade. So the rules are specific, and believe it or not, if you can learn to read this chart properly and use the rules the way we teach them, you can get your winning percentage up easily to 80%, 75, 80%, but the upper end guys do 90 and above. And so, and I don't care what anybody tells you, it's possible. I don't care what anybody tells you, you can make money with a stop that's larger than your target if you know what you're doing. You got to know what you're doing, and you got to be able to read the chart, but it can be done. And you know, believe what you want to believe when you read these forums, and you read, you know, you read from these gurus, supposedly trading gurus. And I'm not knocking anybody, and I'm not saying that nobody else knows how to trade, and I'm the only one that knows how to do it. But I just know that what we do works with the way we teach if you use the whole thing. If you try to pick and choose pieces of it, I can't guarantee you that it will work. And that's why I'm so adamant about following the entry process properly and following the stop process properly, because it's tried and true, and we know it works, and it works over and it works over and over and over. And I just showed you all of these trades were trades that would have triggered following our rules that are circled. And you see, out of all of them, there was only one that failed, And if you were using our entry and stop process, it would have been negligible compared to all the rest of the stuff. So assuming you only got 4 ticks out of every other trade, and this was trading from, really this is, if let's just say we started right here from 7:30 to 10:30. That's 3 hours. And let's assume you took every one of those trades that's set up based on our rules. That's 1, 2, 3, 4, 5, 6, 7, 8, 9 trades that would, and let's just assume all you got was 4 ticks out of them. So 4 ticks out of 9 trades, that gives you 36 ticks. And so that's $450. But let's say this one failed and you lost your 4 ticks. So you can basically take $50 off that. So in a 3-hour span, getting only a scalp, you made $400. And that's, and several of these would have given you, you would have had a runner here. You actually would have had a runner here, 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 here. No runner here. You would have had a runner here. And if you'd have got a runner off either one of these, you could have made 20 points on just a single runner. If you got a runner here, you'd have made 10 points. If you'd have got one here, you could have made as many as about 7 or 8 points. And so there weren't any runners on these next two, though. You might have got a couple of points out of one there, depending on how you played it. But the potential to this works, and if you follow our rules, you're going to make money if you're reading the price, the price chart right. And so don't be so concerned. I mean, honestly, I never think about the stop that much. It's amazing how many people are thinking about it. But if you just follow the rules, we've already done all the thinking for you. And when I enter, if I can get in with less than 2 points and my stop is above the signal bar, that's all I'm concerned about at that point. And will I always take a 2-point stop? Maybe not, but if prices don't break above that signal bar, I'm probably hanging with a trade. And you can see right there's a perfect example of it. I showed you one down here in this area. I showed you one right here that you wouldn't have lost a whole lot of money. That's the only one today. It's the only trade that and this was not a great setup, but it was a setup that would have met our rules that we could have taken. It's a little more aggressive than the others, but you could have taken that trade, and if you had have, you might have scratched out with a tick or 2 loss, or even if you let it take your stop, following the rules of 1 or 2 ticks below the signal bar, then you might have lost 4 ticks tops. So it just doesn't get any better than that. And so I don't want you to take this the wrong way. You got to be concerned about your stops, but if you're following the rules, don't be putting a whole lot of thought into it. Just follow the rules and see where it takes you and trade it as it is. And just, nobody should be trading. If you're not already, let me say this, and I'm going to wrap this video up. If you're not already making money consistently every single day, then you don't need to be doing anything but trading the simulator. So, and when you get on the simulator, you're not really concerned. You're trying to trade the best you can, but really you're trading to get experience. And most of your time is going to be spent just getting that experience, watching chart prices print to the chart every day. I got thousands of hours of experience watching prices, the ES print every day. I know it like the back of my hand. I understand what it's doing. And you can get there too, but you won't get there overnight. You got to spend your time in front of the screen watching it happen, and then most importantly, doing that on the simulator and trading. And then at the end of the day, you got to study. You got to study your trades. You got to study the chart, figure out which trades worked, why, figure out the ones that failed, why they failed, and what you did wrong, if you did anything wrong, or if you just got fooled. I mean, sometimes like right here, you just get fooled. Prices were intended to come down here and run the stops right here and test this low, and you don't know that right here. This is a second, I'm not even going to go into why, but this, going long right there was a possibility, more aggressive, but possible based on our rules, and we just got fooled. Prices were really headed down to test these lows, and then it went higher. And that's what happens a lot of times. And, you'll understand all this if you understand a price chart and what prices are doing. And if so, follow the rules. Don't question them. We already know them well, from years of experience doing this. Um, we know what works and what doesn't. And one of the key things, I'm going to wrap this up, is following the entry rules. Wait for the key entry points, which are always going to be at strong support and resistance. And you can see that strong resistance across there. Plus you have the trend line. And when you break the trend line, you're usually going to get a retest of the low before you reverse. And so we knew to expect prices to come back down here. But even past that, we knew that there's strong resistance right here. So we're taking advantage of that by entering and putting our stop above that. So wait for your signal bar to form. This one was just okay. This one was really nice. And you wait for your signal bar to form. You set I actually would have gone short below this bar, and you see it tried to come back, but as long as your stop's above there, you were safe. It never got triggered. It tried, but it couldn't do it. And so then you come on. So this was really your signal bar right here, and your stop goes 1 or 2 ticks above it. And so you would have entered right here with about a 4 or 5 tick stop, and finally it took off, and you never took any heat. But you're using that resistance to help protect your stop, and you're using that signal bar to help signal your entry. And you don't try to sneak in early. Let me just find a good example of what happens when you try to sneak in early. You might have right here trying to go long. This bar is way up here, and you're thinking that it's going to end real bullish, and so you're thinking, hey, yeah, I'm going to get in here early and ride this on up. And then next thing you know, it closes, and it's got a big stem up there, and it closes back in the middle of this bar. And so you got fooled by trying to enter early. And this one might have been one right here. You might have been thinking going short right here, because this looked like it was going to be just like this bar almost. And guess what? Before it closes, it almost closes on its high. And that's not a good sign, because obviously they're probably going to either take it higher, or they're going to fool people and trap them and then take it down. And that's what they did. They ran the stops by a tick or two and then took it down. So don't try to sneak in early, because this is exactly what will happen to you trying to sneak in early. Again, picture this bar when it was trading down here. It would have looked almost like that one, and you're trying to get ahead of the game, and guess what? You get fooled. So don't sneak in early. Wait till the bar closes, just like that one, then enter. Otherwise, you may get tricked like that right there. So anyway, I'm going to wrap it up. I hope this article and this video is helpful to you and answer some of your questions about the stop and the entry and so forth. Don't try to change the rules. Don't try to monkey around with this. Use it like we teach it, and you'll be a whole lot better off. But anyway, this is Matt with PriceActionTradingSystem.com, and we'll see you next time.